Chasing the SpaceX IPO is probably going to cost you money. I know that's not what you want to hear when everyone online is acting like this is the investment of a lifetime. But here's the thing. The people who actually get rich from IPOs are almost never retail investors like you and me, and I can prove it. The good news? There's a smarter play here, one that could actually let you benefit from SpaceX's success without touching the IPO at all. And by the end of this, you'll know exactly what that is. Before we get to SpaceX, you need to understand the weapon you're already holding, or should be. An index fund is dead simple. It's a fund that automatically tracks a stock market index. The FTSE 100, for example, is just the 100 biggest companies listed on the London Stock Exchange. A FTSE 100 index fund buys tiny slices of all 100. You're not picking winners, you own everything. The same applies to a global index fund, tracking the MSCI World. That's over 1,400 companies across 23 countries in a single fund. One purchase, instant diversification. And because nobody's sat there actively choosing stocks, the fees are tiny. We're talking 0.07% to 0.22% per year on something like Vanguard's FTSE All World Fund. Compare that to an actively managed fund charging 1% to 1.5%. That difference, compounded over 30 years, is enormous. Let me put a number on it. You invest £500 a month for 30 years. At a 7% average annual return, with a 0.15% fee, you'd end up with roughly £580,000. Bump that fee to 1.5% and you end up with around £476,000. That's over £100,000 gone. Not to the market, but to fund managers who, statistically, don't even beat the index anyway. Index funds aren't boring. They're one of the most ruthlessly efficient wealth-building tools ever created. Warren Buffett has literally told his wife to put 90% of his estate into an S&P 500 index fund when he dies. That's the context. Now, where does SpaceX fit in? Here's what most people are going to do when SpaceX goes public. They're going to see it trending, open their free trade or trading 212 app and throw £500 or £1,000 at it on day one. It feels bold, it feels smart, like getting in early. But here's the brutal truth about IPOs. By the time you're buying, you're not early. Venture capitalists, institutional investors and insiders have already made their money. The IPO is the moment they start selling to you. Facebook's IPO in 2012 dropped 50% in the first 3 months. Uber's IPO lost investors 8% on day one and took over 2 years to recover. Even with brilliant companies, the IPO price often has years of future growth already baked in. You're not getting a bargain, you're getting the bill. SpaceX is genuinely extraordinary. Reusable rockets, Starlink internet beaming from orbit, contracts with NASA. This isn't a meme stock, it's a real business. But that's almost beside the point when it comes to whether you should buy the IPO. Here's why. Elon Musk has repeatedly said he doesn't want SpaceX to go public soon because short-term shareholder pressure conflicts with long-term moonshot goals. If and when it does IPO, the valuation being floated around is north of £150 billion. At that size, even if SpaceX doubles in value, which could take a decade, you've made 2x your money. A global index fund has historically done roughly 10% per year. 7 years of compounding at 10% already doubles your money, and you're not taking single stock risks to get there. There's also the ISA angle, which most people overlook. Your ISA allowance is £20,000 a year, and every penny of growth inside that wrapper is completely tax-free. No capital gains tax, no dividend tax. If SpaceX lists in the US, which is likely, you can still buy it through a stocks and shares ISA via platforms like AJ Bell or Hargreaves Lansdown. But, and this is key, so can you buy a global index fund that will eventually hold SpaceX automatically once it's large enough to enter the index? You don't have to choose between SpaceX and index funds. In time, you might get both. Right, here's what you actually do. Practical, step-by-step, starting today. Step 1. Open a stocks and shares ISA if you haven't already. Trading 212 offers one with 0 platform fees. Vanguard UK's ISA is excellent if you just want simple, low-cost index funds without the noise. AJ Bell and Hargreaves Lansdown are worth it if you want access to individual stocks, including US IPOs like SpaceX, alongside your funds. Step 2. Build your foundation with a global index fund. Vanguard's FTSE All World ETF, ticker VWRP, is a solid default. It holds over 3,700 companies across developed and emerging markets. 0.22% annual fee. You set up a regular monthly investment, even £50 a month is meaningful, miles, and you leave it alone. Step 3. If you genuinely believe in SpaceX long term and you want exposure, earmark a small satellite allocation. Most sensible investors cap individual stock picks at 5% to 10% of their portfolio. Not because they're cowardly, because concentration risk is real and has wiped people out before. So if your portfolio is £10,000, that's £500 to £1,000 maximum on any single company, SpaceX included. Step 4, use your LISA if you're under 40 and buying your first home or saving for retirement. The government adds a 25% bonus on up to £4,000 a year. That's £1,000 of free money annually. The lifetime ISA through AJ Bell or Moneybox lets you invest that in index funds too. The boring truth: the people who build real wealth aren't the ones who get lucky on IPOs. They're the ones who show up every month, invest consistently, and let compounding do the heavy lifting. So let's bring it together. 1. Index funds are one of the most powerful wealth-building tools available to you. Low fees, instant diversification, and they beat most professionals over the long run. 2. IPOs, even exciting ones like SpaceX, are typically priced for institutional investors, not us. And the history of retail investors buying day one is not pretty. 3. You don't have to choose. Build a strong index fund foundation inside your ISA or SIPP, and if you want SpaceX exposure, keep it small and disciplined. If this was useful, subscribing is the best way to see the next one. And if you want to go deeper, the next video on how to build a complete ISA portfolio from scratch is worth watching next.